After a period of severe price decreases, Porsche 911 Turbo prices flatlined in the past 3 months. Are we looking at a potential market bottom here, or are we just seeing the effects of spring? It is not an isolated development, because we also saw this in the Cayman markets. In this video we'll discuss the latest price developments, whether or not we're looking at a market bottom, and if it's a good moment to buy a 911 Turbo. As always, we'll start with a quick market overview before looking at the price trends. Over here we have the US market of March. In total there are 573 cars for sale, and this is 22% less than 3 months ago. So the supply development is in line with the general trend. Supply levels are decreasing across the board. In terms of prices, we are not going to cover all of the details, so let's look at some price overlaps. Personally, I always find this the most interesting bit. Once your budget reaches a certain level, you can buy almost any 911 Turbo. We can see, for example, that the sweet spot lays somewhere between $140,000 and $150,000. For that price you can opt for a pristine manual 996 or 997, a low mileage 991.1 or a 991.2 with a slightly higher mileage. The 992s seem to live on another planet when it comes to prices. There's hardly any overlap between them and the normal 991s. Luckily for most of us, 996s with a slightly higher mileage start already at $50,000. Now, as I already mentioned in the introduction, these prices are quite similar to the ones 3 months ago. In other words, they flatlined. Hereby the development deviates from last year. Prices have been falling since their market top in the summer of 2022. It is, however, in line with the developments in other markets. In last week's Cayman market update we saw that many trends flattened, and the same applies to, for example, the McLaren 570S market. Now it's interesting that this flatlining of the price trends doesn't apply to all 911 Turbo generations. 996 prices, for example, dipped, and 992 prices continue to fall at the same rate. The latter development is perhaps in line with what we could expect, but the first one is less so. Let's have a look at the price trends, and after that we'll discuss if we're looking at a market bottom or just a spring effect. We'll start with the generations for which prices flatlined, the 997s and 991s. Over here we have the prices for the 997.1 and .2s, and this includes the base and the S models, but only the automatics. Looking at the most recent developments, we can see that .1s increased by 5% and that the .2s were stable. The 5% increase that you see over here is a slight overstatement due to a change in the market composition, but it is clear from the confidence intervals that prices increased slightly. Both of these developments are deviations from the previous short-term trend, especially for the .2s. In that market, prices decreased by 11% during the last 9 months, a rate that is higher than you would typically expect. Prices in the .1 market are only 2% lower than in the summer of last year, but the uptake is clearly a deviation from the previous period. The long-term trend for the .1 is then also strong. Prices are still 20% higher than before the pandemic. For the .2s this is 20%. Now the most recent developments in the 997 market are quite similar to what's happening in the 991 market. Over here we have the price trends for the 991.1 and .2, base and S models. And we can see again that prices flatlined during the most recent 3 months. This is a big deviation from the short-term trends that were mostly pointing down. I need to point out that these recent price changes are not all fully statistically confirmed. Only the one for the 991.1S is. The other ones are in the so-called grey area. But given that we're looking at a 3-month change, this isn't so strange. We can also see that prior to this market update, prices were falling quite rapidly, especially in the .2S market. In this period, prices decreased by approximately 10%. If we then zoom out a bit and look at the long-term trend, it is clear that prices are still quite a bit higher than at the start of the pandemic. This by itself is a good result. Some sports or supercar prices are back to where they were 3 years ago. Let it be with a different reading on the odometer. So we saw now that price dynamics changed drastically in the 991 and 997 market during the past 3 months. Prices were mostly flat. And this is different from the decreases that we saw before. But the same doesn't apply to the two other generations, the 996 and 992. Price dynamics are different in those segments. If we start with the 996, we can see that prices decreased by 8.7% or $7,000 between January and March. And this is a rather large decrease. I investigated it a little bit more and found that this is mainly the result of a price drop in the manual market. It is an interesting development, right? Prices for 996 turbos developed in a relatively stable way compared to some other models. Prices increased in line with the rest of the market, but there's not such an extreme topping pattern. Prices sort of stabilized in the summer of 2022 and didn't change much. Up until the most recent 3 months, that is. We can also see these developments back in some other data, but we'll discuss more about this in a bit. Compared to June 2020, prices are still up by 40%, so long-term owners have little reason to complain. Prices also plummeted in the 992 market. Over here we can see that prices have been decreasing since their market top. Prices are down by 13.3% or $40,000. Now sometimes people appear to be under the impression that I use the words price decrease and these cars are cheap and under MSRP interchangeably. This is of course not the case. Prices can decrease, but they can still be above MSRP and expensive. Look for example at the C8 market. Now if we zoom into the 992 market, we can see that this high level drop applies to basically all model years. Prices for 2022 and 2021 cars decreased by approximately 13%. And the reason for this decrease is obvious. First, they're new cars, so they have a high mileage sensitivity. Second, the scarcity level in the market decreased since their introduction. But more about this soon. So we saw now that prices flatlined in the 991 and 997 market, but decreased in the 996 and 992 market. But is this a new bottom or just a temporary resurgence caused by the spring? This pattern or flat price development is appearing in more and more markets, so I made a separate video in which I discussed some reasons as to why this could be a bottom, but also as to why it is unlikely to be a bottom. But all of those things we're not going to discuss in this video. If you want to know more about that, then I recommend that you click right over here. We'll focus on the more idiosyncratic factors surrounding the turbo market. First off, Porsche announced major price increases for their cars. That is, price increases that are much higher than their normal price increases. On the Randlist forums you find percentages between 5 and 8%. Whether these numbers are true or pure speculation, it does not matter so much. A significant price increase is likely a good thing for at least 992 values. The question is this information already reflected in the price? At this point it seems unlikely. We just saw that price trends in the 992 market are decreasing linearly. If the information would be reflected in the price, I think it is reasonable to assume that we would see smaller price decreases. The second thing we need to discuss is the scarcity level in the market. In the beginning of the video I mentioned that supply is 22% lower than 3 months ago. This is not something that's unique to the 911 Turbo. Supply decreased in almost every car market. What's unique though is that it seems to have fallen below demand, or at least is at a level where demand and supply are more in balance. And this is not something that I've seen in many other markets. Now demand itself is difficult to measure, but we can look at a proxy for the market scarcity level. The time that a car is advertised for sale. If this is increasing, cars are spending more time on dealer lots, something that typically indicates that they're more difficult to sell and that supply is larger than demand. The opposite of course applies if advertised times are decreasing. I think that the rapid pace by which cars were selling during the pandemic is still fresh in our memory. If it is not, no worries. Have a look at this graph. Over here we can see that 911 turbos were selling like hotcakes during the pandemic, and that these times decreased rapidly. We can also see that 992s were insanely popular. Advertised times were below 20 days, and this is Corvette C8 territory, a car that ranked with 13 days as the fastest selling car in the US. Dedicated viewers of course know that these trends changed somewhere mid-2021 and have been increasing ever since, at least in most markets. In the 911 Turbo market, we can see that the development was stable for the 991 and flattened slightly in the 997 market during the last quarter. So this means that, especially in the 991 market, demand and supply are more in balance. What it doesn't mean, and let me get this very clear, is that the price developments that we just saw are a market bottom. After all, it signals that the scarcity level in the market remained the same, not that it is increasing, hereby pushing prices higher. To confirm a market bottom, you would like to see decreases like we saw in the beginning of the pandemic. Now, something that we didn't talk about yet, but definitely deserves to be mentioned, are the developments in the 996 and 992 markets. Advertised times increased massively in the 996 market, and this is in line with the price decrease that we saw before. Did they get too expensive? Are they too much of a niche product now that credit is tightening? Let me know your thoughts on the 996 development down below in the comment section. Looking at the 992 generation, we can see that there's a very small decrease in the increase rate. Do you see that? The trend is a bit concave. This means that the scarcity level decreased massively, but is doing so at a slower pace. Translating this back to the price developments, this could mean that we'll soon start to see the first decreases in the depreciation rates in the 992 market. No bottoms, but just lower depreciation rates. Data to calculate these advertised times is very kindly provided by Autotempest. Autotempest conveniently pulls listings from a bunch of different websites into one place, so that you can browse through all of them. Check out the links in the description to find the 911 Turbos for sale right now. Alright, so we covered a lot of data, but what does all of this mean? Is it time to buy or time to sell? Let me quote a famous stock trader. There's a time to go long, a time to go short, and a time to go fishing. Right now, I think it's time to go fishing, or in petrolheads terms, go for a drive. Especially when it comes to the 991 and 997 generations. For those, the conclusion is very much the same as in last week's video. The data doesn't support a strong sell or buy. However, the bottoming indicators are slightly stronger than in the Cayman market. Both prices and advertised times flatlined for the turbos, and this is not the case for the Cayman. But still, we cannot fully rule out that this is just a temporary bump and, for example, the result of spring. The conclusion is therefore the same as for the Cayman market. Now is the time to start monitoring those prices like a hawk. If it turns out that the most recent change really reflects a change in the price dynamics and you are among the first to pick it up, you can of course use it to your advantage. Now when it comes to the 992, we saw that prices are still decreasing linearly. Yet, looking at the advertised time, we might be close to a situation where the oldest cars will see decreasing depreciation rates. The scarcity level starts to look more stable. So if you are someone who likes to buy cars after they took their first depreciation hit, pay attention. Again, I would monitor those prices like a hawk, or simply tune in for the next turbo market update. But what about the 996 generation? If you're a buyer, it might pay off to wait a little bit longer and to see what prices will do. Will they continue to decrease, or will they flatline like we saw for other generations? You don't want to buy a falling knife, at least if you care about values. But since you made it till here in the video, you probably do to some extent. Now if you're a seller, the best moment to sell was of course when prices topped across the board, but that's history. Given the most recent price development and the development in the advertised time, it might not be a bad moment to sell if you were anyway thinking of selling. Prices are still up by 40% compared to their pre-pandemic values. Is the most recent development a reason to panic sell? Absolutely not in my opinion. Just something to keep your eye on. Now before I end the video, I would still like to say that I'm very much aware that all of the most recent videos cover various Porsche markets. However, I will upload a few shorts during the next 2 weeks that will cover smaller markets. You can find the shorts over here. Other than that, we have of course the regular McLaren and Ferrari market updates, but also some other cars. I'm thinking about the G-Class, the Euros, perhaps the Land Cruiser, but also AMG GTs. BMW M cars are also requested a lot, and they are work in progress, but I need a bit more data for a video. And with that we arrived at the end of this video. Now if you enjoy this data-driven way of analyzing car markets or find it helpful in your buying or selling process, please support the channel by clicking on the like button down below. Thank you. As always, thank you for watching, and I hope to see you next week for a new video.